This is Martin Ose from Cresa, Corporate Real Estate Advisors. This video is part of a series called Cresa Cares, which we've put together with friends of ours from a variety of different industries, including HR, finance, construction, manufacturing, legal, and of course our own expertise, which is project management and corporate real estate. The content in these videos will help your firm survive COVID-19 and ultimately emerge positioned for success. Thank you for joining us on Cresa Cares.
So Justin Levine here from Cresa, the Senior Advisor, Cresa Ottawa. On the call with me is John Comba from Judo Johnson Comba. John, why don't you go ahead, introduce yourself and tell us a little bit about what it is you guys do over at Judo Johnson Comba.
Yeah, so I'm the president of Judo Johnson Comba. We're an independent real estate appraisal firm. I've been doing this for 32 years this coming July. 6 appraisers in our office, 3 female, 3 male, and a full-time researcher and an admin support. And we've been, working in this market for the last 30 some years.
Great. So great understanding of the local market here in Ottawa and surrounding region. I imagine you travel the valley a little bit as well.
Yeah, that's correct. I always say our market's 90% Ottawa, but we we'll go to Cornwall, down to Kingston, up to Pembroke, sort of within that triangle.
Sure, fair enough. So John, there's obviously with the current situation, a lot of businesses are faced with challenging times, and that would translate to challenging times for landlords as well. Oftentimes, the success of a tenant would lead to success of a landlord. But what have you been seeing or hearing in terms of rent relief? We've been hearing a lot of conversations and talk about that. Have you been seeing a lot of rent relief coming through the market? What have you been hearing or seeing?
So if we're talking about the office market, we haven't been seeing a lot to date. I mean, we've seen a lot on the retail market, as you can well imagine.
Sure.
But on the office market, most of our clients said most of their office tenants have paid the rent for April. I haven't heard about May yet.
Right.
Everyone's expecting it might be not as good as April as we work through this, and companies are challenged from a cash flow point of view.
Sure. And so on the retail end, how have landlords been treating these rent relief requests? Have you heard much of that?
So it's varied across the board. I mean, some of them have done, a complete deferral of the rent where they're trying to, they'll ask the tenants to pay whatever they forgive for now over the remaining term of the lease once they can start paying the rent. Some have done partial where they've, said, look, I need to get my operating costs paid. Can you at least help me with that? So it's case by case, tenant by tenant. And it's taken up a lot of time from the landlord's point of view, especially on the retail sector. They've also, had to talk to their mortgage companies to get deferrals on their payments. So depending on how they're mortgaged, I mean, some landlords will need the money as soon as possible, where others, maybe they have a low mortgage and are not as critical.
Right. So if I were to summarize, then at least in the first month or so, it seems like the office market remains fairly steady and healthy. But the real challenge is within that retail sector. I guess there's no right or wrong answer at this point, case by case, that landlords are dealing with this.
Yeah, that'd be a good summary.
And from a valuation perspective, I'm sure the interruption of cash flow poses a challenge, especially in your world and how you approach, estimating market value on these properties. But in the case where there might be a balloon payment or, the base rent might increase to account for whatever deferred rent is happening today, would that not simply lead to an increase in valuation down the line?
So in theory, yes, it should lead to somewhat of an increase, all else being equal, but we would not be capitalizing that increased rent. We would probably be present valuing it over the term of the lease, because there's no guarantee that you're going to continue to get that level of rent payment on a lease renewal.
From the owner occupant perspective, I have a sense, and perhaps I'm wrong, and maybe you've heard differently, that business who may own and occupy their building or their real estate, perhaps they turn to a sale leaseback scenario, in which case they sell their building and agree to lease it back for a certain length of time to free up some of their capital and increase liquidity and reinvest that capital back into the operating side of their business. Have you been hearing much or seeing much of these types of conversations or thoughts happening in the owner-occupied sector?
I mean, those conversations come and go and have come and gone over the years, where an owner-occupant, for whatever reason, at some point, even when the market's good, may need some cash and will do a sale leaseback. So I don't know that I've seen, well, we haven't seen or heard any of that yet, but it wouldn't surprise me that as we work our way through this, that market may increase.
Right. And you haven't heard anything then from investors who may be looking for this opportunity? It seems like a general pause and wait and reflect until we're on the other end of this.
Yeah, so a lot of the investors are taking a pause right now, both the private and the institutional. I mean, they've been very focused just on the day-to-day management of their portfolio and how they, can get through with what they have right now. Some of our clients have built up a cash reserve in the last month. They've gone out, they've put mortgages on some properties where they've had no financing on it, and they've set that aside to look for opportunities in the marketplace. But nobody has jumped yet.
Would those mortgages have been put in place before COVID or during the past month and a half?
So those were put in place during COVID, but what we're seeing is it's relationship based. So these are long-standing clients with the banks. The banks know their balance sheet inside out. They know who they are. They're not giving high loan-to-value ratios. They're cut those back from what was 75, maybe down to 50. Debt service coverage ratios are also been increased. The banks they are lending, but very cautiously.
So it sounds like they're lending on an institutional level, private money. But what about just shifting back to that owner-occupied space? Have you heard much coming out of the financing markets in that regard? Extending mortgages, lines of credits, or other financial products to help get owner-occupants through this period?
I would expect that the banks will be looking, like I said, on a relationship basis. They will be, financing those companies that they have pretty good faith in, that they understand what they're doing, they understand their balance sheet. They will go down that road for sure with those companies. If they had a long-standing relationship with them, I think it would be difficult for companies to try to do one-off mortgages with a lender that doesn't know who they are.
And so I think it'd be fair to say we're probably headed, or if we're not already into recessionary times. If I think back to 08 and to where we were just pre-COVID, the investment market healed, cap rates had come back down, but and correct me if I'm wrong in my thinking, but we could probably expect cap rates to climb back up again coming out of this. Is that sort of what you're thinking or seeing?
So it's quite interesting, because what's happened is that the mortgage rates are still pretty well where they were, even though, the Canadas have plummeted to below 1%. It's just that the spreads on mortgages have increased, and cap rates are very, tied into what mortgage rates are.
Right.
So when you saw the Canadas go down, you thought, oh, mortgage rates are going to come down, therefore cap rates should stabilize. But no, that hasn't happened. I think cap rates will go up. And in the last recession, we saw 100 to 200 base point increase. The lower one was for, good Class A type assets, good tenants, where the upper end of that range would have been for more marginal product. So you know, I'm expecting cap rates to increase, but it's going to take a little bit of time. I think it's not going to happen overnight, but they should increase, and it will depend on the duration of this as well.
Sure, fair enough. How I'll say this: what's the typical lag time for cap rates to catch up to what the mortgage rates have done?
I'd say 6 to 9 months.
Okay.
Yeah.
So assuming this thing ends tomorrow, you know, we probably expect another month or two for government to make an announcement. I'm just sort of putting together a hypothesis here, you know, and then you push that out to 6 to 8 months from now. So it might be, if this were to end tomorrow, 9 months from now, that we might see a correction or an inflection into the cap rate.
Yeah, and you know, and I think that I don't think we're going to get back to normal in 6 to 9 months, personally.
Right.
I think we're into this for some time. And if a company's looking to raise capital, my view would be to do it sooner rather than later. The reasoning being that, you know, if we think this is going to be 2, 3, 4 years of contraction, then as we move through it, there will be more product become available and there'll be more competition. And right now, nobody knows. So if you thought cap rates were for suburban right now around, let's say 6 to 6.5, 7, and you could maybe sell it now with a half point spread on that upwards, you know, that might be better than waiting a year and it'll be maybe a whole 100 to 150 points higher.
Right. Sure. That's an interesting comment. So perhaps on an owner-occupant level or from a selling level, try to be a little bit more proactive and beat the markets. Is perhaps what you're suggesting? If I were to
think so. I think that's, you know, I would definitely be looking at that if I owned some real estate that I owner occupied and needed some capital.
Right. And then if we shift to larger investments, I mean, Ottawa leading into this as a local market, we've had a very healthy investment market. Q1 saw, and even since COVID, we saw some fairly large transactions in the marketplace. Former EDC or Shopify HQ2, if you will. What else do I have? I have the Terminal Avenue, the Campers portfolio. I mean, those are substantial transactions which would have been, you know, probably negotiated and in the pipeline well before even 2020. So what type of event like this that we're seeing and then leading into potential recessionary times, how long might it take to see an activity come back to where we were in terms of transactional true investment and not necessarily someone looking to simply unlock capital in an owned asset?
It could be a while. I mean, as you know, we track sales of over 500,000 commercial sales in the Ottawa area. And last year we had 2.6 billion, which was a record. And it was the third year in a row we were over 2 billion, which, you know, has been outstanding. I don't see us being over 2 billion this year. I doubt we will be next year. Unless, you know, we have a big institutional transaction from one to another of, you know, some of the trophy properties downtown, but I don't think that's going to happen. I think we're probably, the institutions are probably overweight real estate right now. So they may have to sell some of them. I don't think so. I think most of them will be wait and see and see how this goes. And the one thing that's come out of this is the Class A trophy properties are cash flowing and government leased properties are cash flowing.
We're in trouble if the government's applying for any rent relief for any of their leases, I think.
We are in big trouble if they are. So I think, you know, those will continue to cash flow and the institutions may just hang on to them and not want to sell them because they may become sacred cows, if you will.
Right. Well, can you foresee a scenario in which they may have to bundle a trophy or property, one that's leased long-term to the feds, bundle those with an underperforming grouping of assets, perhaps?
That's always possible. That's always possible. And it happened last time in the last recession where we saw, that kind of thing happening for sure.
Right. And then just shifting, I guess we should touch a bit about leasing, and we talked a bit about it, especially on the office side. It seems like fundamentals are still fairly strong. Retail is obviously hurt. Pockets of industrial, I would suppose it depends on the industry sector those tenants are serving. So they might be on either side of the spectrum, but with downturn and uncertainty faced in the market, and we'll stick with the office example. What may tenants expect from landlords, either on a renewal or a new lease basis, coming out of this?
I would think that tenants should not expect landlords to be able to fund tenant improvement allowances like they did in the past. I don't, and it'll depend on the landlords. I mean, if you're leasing from an institutional landlord, maybe not, that may not be as big a problem. But I think if you're, leasing from a private landlord who might have had some cash flow issues during this, they may be not in the position or reluctant to fund tenant improvements to the level that they were in the past.
Right.
I think also that, the landlords are going to, want to have a better understanding of who the tenants are, a better understanding of their balance sheets. And having said that, if the tenant is pretty strong financially, they may be in a better bargaining position. Landlords might be willing to lease at a slightly lower rate to, top quality tenants where, all the landlords are going to be chasing them in the event that, there's another crisis of some sort that we can't imagine.
So would it be a fair statement then, if I use our earlier conversation about owner occupied assets and being proactive, that tenants perhaps should look to being just as proactive, especially as they're approaching either a critical date, like exercising a notice for renewal or lease expiry, and not necessarily ride this out. And I say that if landlords might retreat on inducements, especially for capital improvements to spaces, that pie just might be getting smaller and smaller. So if a tenant is proactive, they might benefit from that at this stage, perhaps, rather than waiting?
I think so. I think the longer this goes on, like April was good for the landlords, the office landlords. May, some of them are expecting it not to be as good. And then June, it just gets worse and worse as we go along. And so, it may be to the landlord's benefit to, if the tenant's paying the rent and they're a good tenant and being able to lock them in for a longer period of time, it'll definitely help the valuation of their property going forward.
Sure. As difficult as times might be in a global sense and nationally, just the strong presence, the fact that we're a capital city, government presence in both owned and leased assets. Typically, how sheltered would Ottawa be as compared to some other larger markets in Canada across?
Oh, I think we are blessed to be in Ottawa, to tell you the truth. I mean, we have a far higher percentage of our population getting a paycheck, be it from the federal government, be it from the tech industry, and all of the consultants that support all of those businesses. We are very blessed with that. And we also have a large population of retired public servants who are getting a nice pension. So yes, there's a lot of people that are hurting pretty badly in Ottawa right now, but not to the same extent as other cities. So I think going forward from an investment point of view, I think Ottawa once again will be a sought after city by investors for that reason.
All right. I want to thank you for your time. Just for everyone out there, how can someone find Judo Johnson Comba, see if they wanted an appraisal on an owned asset or a market rent study or some of the other services you offer? How can they find you?
So we have a website, judojohnsoncumba.com. They can contact me at John, John, at judojohnsoncumba.com, and reach out to anybody on our team when you go to our website. But yeah, we're there.
Great. Well, thanks for your time, John, and continued health for you and your family during these crazy times.
Yes, thank you, and same to you, Justin.
We hope this video was helpful. For further information on today's topic, or to see other Cresa Cares content, click the link. To connect with us directly, just email us. And of course, share this with anyone you think would benefit.